Okay, so what I'm doing here is I am going to do an exercise that's very, very similar to your chapter 3 homework. Now, I'm opening my root beer. What we're going to do is we have got an unadjusted trial balance. So it's my job as an accountant to go through every one of these accounts and think about everything that has happened with the company. Because what I need to do in this chapter is make sure all revenue is recorded, regardless of when I receive the cash, and all expenses are recorded, regardless of when I pay out the cash. This gives us a good financial position when I run my financial reports. My information is true and correct, and it reflects what really is happening with the business. So we're given this trial balance here. And then they give us these journal entries right here. Now, in my previous chapters, the depreciation, usually I like to play around with this and remind you all, and I'm going to do it anyway because that's just how I feel like today. What we do with our depreciation, in chapter 3, we use a very simplistic method, which is called straight line. We have our cost, our residual value, and our depreciation base. Now, the depreciation base is a term I use. The book doesn't use that, but I do. Okay, then we're going to need to figure out what's the useful life. So I'm going to put the useful life, and then I'm in parentheses, I'm going to put years. Okay. Okay, got my useful life. Okay, you know what? That's pretty much all I need for right now. And so what's going to be my annual depreciation? And I don't know what's going on with this. I really don't. They didn't give us this information, but I'm going to try to figure it out myself. So basically, my equipment has a cost of $153,850. They're telling me my annual depreciation. Is this my annual? Doesn't tell me if it's my annual or if it's my monthly. We'll figure it out. And then I have a monthly. We're gonna have a good time. We're gonna pretend that and this is why I don't have all the information. We're gonna pretend that it has a 0 residual value. I'm gonna come up here, make this pretty because I like pretty. I take my cost minus my residual value. That's my depreciation base. My useful life in, let's say, 10 years. So we're gonna go 10. My annual depreciation becomes that amount. Now, in order to determine, so basically I take my depreciation base divided by my useful life. Here's my annual depreciation right here. Easy. Now, what I'm going to do for monthly depreciation, I'm going to take that annual and divide it by 12. Now, I'm assuming this is a monthly. Now, I could also make this 5 years. So look how it changes. 3 years, so on and so forth. But we're going to use 10 years just because I feel like it. So that's how you do straight line depreciation. Cost minus your residual, and it could be anything. I could put that amount. It's okay. It just is recording how we are utilizing that fixed asset and the cost associated with utilizing that fixed asset. Because we're using it, we're basically eliminating the usefulness of it because it can only last so long. And that's what we're doing. We're recording that financial cost to us over the life of that fixed asset. And so cost minus residual value, there's my depreciation base, divide by my useful life. And then if you really need to, you can divide that by 12 to get your monthly depreciation. And that's how you do straight line depreciation. So we have 2 of those, and then we got some salaries, and they've given us the dollar amount. I'm going to kind of come back in here and show you how you figured that out too. Then they got unexpired insurance, fees earned but not billed, supplies on hand, rent unearned. Okay, here we go. Let's get her done. Okay, and I think, what did it say? July 31st. We're gonna pretend it's 7:31 our time. Okay. I'm going to have depreciation expense. And I'm going to be very specific. It is going to be for the building. And they said that was 3,600. Now, depreciation expense always hangs out with accumulated depreciation. Accumulated depreciation is a contra fixed asset. We have this account to show how much of that fixed asset, how much of its life we have already expensed. That's what its purpose is. So it's a contra asset account. Now I'm going to come down here and I'm going to get the next one in. Very similar. It's going to be depreciation. I believe this next one is equipment. And its dollar amount was 3,120. There we go. 3,120. Notice every time I have depreciation, you can always find accumulated depreciation. Okay? Depreciation expense, accumulated depreciation. Wherever Jack goes, Jill is follows. Okay? That's just kind of my little hint and clue. Okay, then right here, what's next? Accrued salaries and wages. So we're going to call it salary expense because I'm not going to deal with separating the two. 3,520. Okay, so what happens here is now I've got this is my straight line right here. And I'm just going to make a little note because I'm going to save this and put it in the canvas. So what happens with our wages? Now, it's kind of weird. So, okay. Arizona Western College, our payroll period ended this past Sunday. Well, what day was that? That was on the 26th. Well, you got all this, you got all the employees and we come to work. So payroll period ended here. And we work the 27th, the 28th, the 29th, and the 30th. Some people will work the 31st, but it just depends. So we're just going to pretend that, basically we've got 4 days here where people are coming to work and we owe them the wages. Except this payroll period is not going to be paid until February 14th. Oh, isn't that fortunate? Okay. So we need to, at the end of the month, record all wages, salary that we owe to our employee, even though we're not going to pay it until February 14th. So normally what you do, it's really, really simple. So I'm going to come over here. So I'm just going to come up with some stupid names. Okay. I'm going to put Harry Potter because why not? Ron Weasley. Oh, Draco Malfoy. I'm just gonna leave it like that. Okay, let me give myself some room here. And let's say, let's also move them down just one tad, just so I can have enough room to show you guys little different things. Okay, so this is the employee. This is their hourly rate. And these are their hours that they work that we haven't paid them for. And this is our total. So I'm going to have fun. I'm just going to make up things. It's not going to balance with what they have, the 3,520, but that's okay. So my hourly rate, let's say he gets $20 an hour and 4 days, let's say he's got 40 hours. Now I'm going to make sure this puppy is looking pretty because I can't stand it when it's not formatted. I'm going to drag this down. I'm also going to sum that. Then right here, I'm going to put in here what is already in okay. And then this is my adjusting entry amount. Okay, this is my subtotal. Okay, let's say Ron gets 30 and I like Draco, so we'll give him 25. And let's just make them all 40 just to make it easier and not cause any drama between the employees. Right now, I owe $3,000 worth of wages as of January 31st. Now, normally what we do is we look to see if there's anything in salaries payable or credit already. If there's not, I need to make an entry, so let's pretend there's not. And so that means that my entry's going to be $3,000. Okay. And well, how do we do that? So let's come over here. Did I journal that already? Yes, I did. Just like that. Short, sweet, to the point. Okay. Onward. Unexpired insurance at July 31st is $5,440. Well, what was my prepaid insurance? It was 8/1/20. Okay, what's on my 8/1/20? They're saying that I still have 5,440. Okay, so that must be what has expired. So that is my insurance expense. And then my offsetting entry is prepaid insurance. Okay, good. Okay, what's fees earned but unbilled? Okay, that one's easy. We haven't billed it yet. It's going to be accounts receivable. They can't pay it until we bill it. Okay, next one. This is another one where we're going to have to go back up and we're going to have to look to see what the beginning balance was. It says supplies on hand at July 31st was $660. Well, at the beginning of the month, we had 2210. So all we have left of that is 660. So we need to expense the difference. So 2210 minus 660. I must have used $1,550. So this is going to be my supply. Did I put supply expense? Or did I just put supplies? Nope, I put supplies expense. And this is going to be my supplies. Whoop, I got mail. Isn't that fun? Okay, rent earned at July 31st is 2020. This has to do with that unearned revenue, okay? So we're going to take that, and I believe they call it unearned rent. So up here, where is unearned rent? Up here, we have unearned rent, a liability. We owe them the rent or we owe them the cash back. This is somebody who's prepaid their rent. We've earned 2,020 of that. So I need to decrease that unearned rent. And then I need to put in here rent revenue. Now, the next step I have us doing, now there's just not a whole lot here. We know this is page 1 because I never change my page numbers when I'm doing these things. But the next thing I want to do is I want to take this information and I want to post it to the ledgers. The only ledgers I have in here are the ones that were affected with these journal entries. Now, I may make a mistake. Maybe I forgot one of my ledgers. We'll find out. Hopefully I didn't. So the first one in here I want to do is I want to do my depreciation expense, 3,600. And that's going to go into my building. That's the unadjusted trial, or that was a trial balance I'm working with. Okay, so depreciation expense, where are you? Right here, we had a zero balance. And now we had on 7/31, my reference is page 1, and that was 3,600. I update my running balance, 3,600. Okay. I finished with this. My GL account number is 6,200. Okay. Now I'm going to come up here, move this right there because I'd rather have it there. I'm going to come in here and I'm going to update my accumulated depreciation with this credit. So let me go to my ledgers. I know my accumulated depreciation is an asset. Assets are way up here. So here's my accumulated depreciation for my building. Okay, the post reference is 1. It's a credit of 3,600. So now I need to update that in that beginning balance. Okay, there we go. Yay, that one's done. That GL account number is 1,700. Okay, here we go. Next one. Yay. I've got depreciation expense equipment 3,120. Let's come back over to that ledger. I'm going to go all the way down here and find it. 731. My post reference is page 1, and that is 3,120. Update my running balance 3,120. Okay, now I'm going to come back over my journal. First 6210. And I'm going to update that. Now I know that I've completed it. Ledgers all the way up here to my accumulated depreciation 731. Its reference is page 1. It is 3,120 plus this plus that. Isn't that good? Plus this plus that. I'm done with this entry, moving it over 1710. Okay. Salary expense. I'm not going to keep going, do this and this and this. You guys see the methodology to doing it. So now I'm just going to complete them and somewhat talk through it. Okay, I'm going to get my salary expense done. That's 3,520. Look at this. Look what I did. Let's fix that. I was wondering why that looked a little off. There we go. Okay, so that one's done. That is 6,000. Salary payables is up here somewhere. Here we go. Now, sometimes the textbook will also have you put in here adjusting entry. You can do that if you so choose. My credit is 3,520. I hope I make a mistake. That would be fun. Okay, my jail account is 2,200. My insurance expense. All the way down. That was, so I need to look at my journal. What was it? 2,680. Okay. 6,310. My prepaid insurance. Okay. Let's get that one. That one's way up here. It's an asset. Post reference. And we're going to credit that because we need to, 2,680. Because what we're going to do is take this and minus that. That reflects what we truly have on hand. Jail account is 1,310. Accounts receivable, pretty easy. This one is up here. Post ref 2,660. There's my ending balance, 1,200. Go to my fees earned. I'm going to have to reprint these because I need 2 of these lines. Oh, what? No, I don't because it's rent revenue. Never mind, I don't. Aha. Okay, 2,660. Okay, I got that one done. That account is 4,000. Look at this. We're almost done. Supplies expense, 1,550. It's not 660. Don't let the book fool you. 1,550. Okay, there we go. 6,300. Now I need to reduce that prepaid. I needed to get that number out of my head before I forgot it. There we go. Beautiful. That is 1,300. Unearned rent is 2020. Okay, there we go. Actually, based on the way this is reading, it says rent unearned at July 31st, 2020 is 2020. That doesn't mean all we earned was 2020. What that means is 7,750 minus 2020, 5,730. That's what it should be. Okay, so let's come back over here. And where's that? 5,730. There we go. See how that updates it real nice and pretty? 2,100. See, even sometimes the book even tries to stump me. Okay, 5,730. All the way down here. That is going to be my revenue. There we go, 4010. Okay, looking at all of this, I've got it all updated. Yay, what more in life could I want? Okay, next thing I need to do. After we're done updating our ledgers, we need to come back up here. And this is actually, let's change the title of this. It's going to be an adjusted trial balance. Okay. And I know that we didn't have any journal entries that affected cash. So this is going to be my cash balance. It's going to remain at 4,800. Accounts receivable, I did have one. So let's see what that new accounts receivable is. 6,400. Prepaid insurance also changed. So let's see what the new one is. 5,440. So did supplies. 660. Land did not change. 128,030. Building did not change. Land does not depreciate. That's why we didn't do anything with it. Okay, never depreciates. So here's my building. I know that I had my accumulated depreciation building 160,030. Okay. Put in my equipment 153,850 and my new depreciation for equipment 114,540. Accounts payable, stay right where it's at. I didn't have any accounts payable. 13,650. Salaries payable, that did change. In fact, there's no balance there. 3,520. My unearned rent changed. That is 2020. Common stock did not change. That's 80,000. My retained earnings did not change. My dividends did not change. My fees earned changed. Okay, I'm going to do something right now because I'm going to watch this and make sure it's doing what I want it to do and that I didn't make a mistake. Always double check yourselves. And we're not going to see if I made a mistake until the very end, but still. Fees earned. Let's go check that ledger. 389,610. I know I have some rent revenue in there. 5,730. Okay, the rest of these are all on the debit side. That's the normal balance. So it better equal 940,000. Salaries and wage expense, 223,410. Depreciation. We didn't have that, so that one's going to be 3,600. That one's 3,120. I just know it because I know those had a zero balance. Okay, salary, depreciation. My supplies. My supplies is 1,550. Okay, making double sure. Okay, and then what's next? Utilities expense. We didn't have any adjusting entries, neither with advertising. 48330, 25830. Insurance expense did change. Let's go look at it. That's right here, 2680. 1955. Here we go. This is whether we did it right. Look at that. Beautiful. Okay. That is a project that I wanted to work on with you guys this week. And there we go. See, it's not that hard. I'm in balance. Now remember, if you guys, when you're doing your homework, if you have something like this happen, oh my gosh, what's wrong? I don't know. Let's find out. Let's take our debits minus our credits, and then let's take that difference and divide it by 9. I must have transposed something. Okay, that'll help you find your error. There we go. Now I'm beautiful. Okay, so I'm going to go ahead and I'm going to come over here. One of these I was messing around with the instructions. There we go. And this is an example of wages payable. So I just want you guys to have this so you can have it forever and ever. And this is going to be an adjusted ATB. And we're going to save this. And I'm going to make a video for you guys. This is going to be answers. And I'm going to post everything in your lovely modules. And we will see you for chapter 4.